Folks, this is a hub call. This is where we do a check-in with Fresno or Central Valley. This is where we check in with all the go-givers that are a part of the hub community and see what is going on in their business, in their world, and frankly, how they can help you. We start with how they showed up, and today Ty showed up first. How you doing, Ty?
I'm doing awesome, man. I'm ready for a great week and just excited about all the projects we're working on together with the community.
Yeah, it's really fun to watch us grow together. I don't know if guys know this, but in the school community, which already has almost 100 folks in there, Ty led the way by releasing a 6-hour masterclass on creative finance. Not to be outdone, I had to release my 10-week boot camp, which has over 20 hours of content. But that is the kind of stuff that is coming. And both of those are free. My boot camp and his creative financing would typically run thousands of dollars. You're going to get those for free in the course. And not to be outdone, we are still actively working on the Buying Vegas series. We have two quote unquote in the can. We are working on video 3 and 4. Once 3 and 4 get to be a little close to being done, we will release video 1 and 2. So Ty, you are the producer. You're the one putting all this together. So what do you say about video 3 and 4?
Man, I'm so excited. I spent a lot of time over the weekend just going through and watching a lot of micro clips, all the little clips we did behind the scenes at WealthCon, at the meetup. We did a meetup in Vegas with the Sub 2 community. I'm really excited about what you're putting together. And then also too, the amount of content, the Lisa Sutton interview is so good. We talking about condo hotels. I was learning
Yeah,
things
me
so
too. I
good.
didn't know. Yeah, right.
So good. So it's like, even too, like I'm thinking like, man, I think I would stay at a condo hotel. In fact, even when I was watching, I said, let me look at pricing on these. What do they cost
Yeah,
to stay on a 2 bedroom and
yeah.
take my family or take my in-laws or whatever? So good, man. So much good education on what you're doing in episode 3 and 4. The whole entire series is going to be epic for everyone.
Yeah, I can't wait. I can't wait to release them. I know you're working really hard on them. I appreciate you. Thank you for just, dude, you say yes to everything. It's just wild. It's just wild. Hey, Patrick, welcome, man. Haven't seen you in a minute. What's going on? You're rocking the stash. The audience is going to love that, I'm sure.
Yeah, no, it's good. It's really good to be back. Just working on a bunch of things. I'm getting my broker's license. Just
Look at you.
following in your guys' coattails and trying to work on my media and things like that. But yeah, the market's holding still. It's strong in terms of value. Obviously, the interest rates are scaring a lot of people away, but a lot of investors are out playing, continuing to do the work and keeping my head on a swivel in case somebody does come along and says, "Hey, need help buying my first home." So.
There you go. There you go. I was talking with Jason Pritchard yesterday. That is, again, a conversation that happened in our school community where people can ask questions. A lot of people are asking Jason, which of course is in your backyard, how he made $200,000 in May profit. He made
Mm.
200 grand. And it's funny. He's obviously very much direct to seller marketing, but guys, you got to pay attention. Jason Pritchard changed his business. He was a flipper primarily for years. And frankly, from 2020 to, I don't know, 2022, you couldn't go wrong. The longer you held it, the more money you made. I want people to hear the next part. Jason Pritchard let it be known that he's buying these stuff direct from seller, cleaning them up, and relisting them on the MLS. To your point, Pat, the reason there's a lot of investors still scooping up properties below the median that need work, cash, quick close. His average is $40,000 on a hotel. It's $20,000 on a flip. Now, that's important, but there's one more variable. He gets out of a hotel in a month. He gets out of a flip in 5 months.
Mm.
So, folks, opportunity there to learn. So, Pat, I'm curious, what are you seeing above, below the median? You seeing any Fresno multifamily? You seeing any fourplexes? What can you give us a little more detail on Fresno?
Sure. I mean, the inventory is still it trickled up compared to the last couple months. In terms of the multifamilies, I'm not too involved with those. I know a buddy of mine, maybe I can touch base with him and report back to you. But I'm just trying to encourage people that it's not as bad of a time to buy as people make it out to be. And if they wait any longer, whether it's early next year to wait, I'm sure Matt has touched on this, but if you wait till the interest rates drop, you're in for a rude awakening. It's going to be much harder. And so I just tell people, hey, make decisions based on your circumstances. Make sure you can wisely afford the payments. But if you can, now's as good a time as any. So that's
Yeah,
my
I'll even go one step further for you, Pat. What I'm telling people now, this is investors, this isn't owner ox, right? This because owner ox, you have some kind of emotions and all of that. But dude, if
sure.
you're an investor right now, this is the market you've been begging for 3 years. It's
Right.
slower, days on market's growing. Take your shot. Go look at 30 days or older, 45 days or older, days on market, and write disrespectful offers. You may have to write a few of them. You may have to write dozens of them, but there is a motivated seller out there somewhere, and it's your job to go find them. So you got to work with professionals like yourself, Pat, to kind of find the needle in the haystack. But now is the time. So I look forward to that, Pat. Elaine, California insurance still wild. I'm getting notes almost every day from folks getting cancellations, folks seeing just it's getting harder and harder. What are you seeing in California insurance?
Well, there's some good news and there's some bad news. So good news on Tuesday. Uh, I didn't realize when we started this that there was so much politics in insurance. I did not realize that. So Tuesday, the governor introduced a bill and said we need to hurry this up. And basically, they're putting a lot of pressure on the Department of Insurance. So there's some urgency based on what's happening in California. So they are hastening and removing a lot of the red tape for insurance companies to receive their rate increases, where they had to wait 6 months and then you had to wait for 30 to 60 days for a hearing. That could have gone on for a year and a half. So now they're expecting rate increases or their rate filings to be approved within 30 to 60 days. So the good news is that those approvals are happening. They're happening faster. A lot of that red tape is getting removed. And the bad news is that there are rate increases.
Yeah.
But
Well,
at least
let me
there's
kind
a
of
lot more competition in the market now.
yeah. Well, let me break that down because I think this is kind of a timing issue. Like if you
Right,
are one of the folks like me who got a cancellation or what's more likely a non-renewal, at least in my
right.
case, not an all-out cancellation, it's a non-renewal. You got about 3, 4, 5 months to get it kind of something else put in place. You're probably out of luck. It's going to hurt. The next quote's going to hurt. I mean,
Yeah,
I've seen quotes go up 40%. But I think what you're telling me is maybe by 2025,
yeah.
we will see more competition and maybe the peak in rates is behind us. I
Well,
think
the
the words you're
urgency
telling
that
me.
yeah, that is what I'm saying. But the urgency is where we were saying we won't even see this increase in this competition. And that way, these 4 or 5 companies that are open right now are not monopolizing the market. Um, they're trying to hasten this so that it's
Yeah,
not at the end of the year. Maybe
right.
we'll see it in September and October instead of December, January, February of next year.
Yeah.
So
Okay.
that's good. That's the good news. And then,
Well,
but
let me ask you this question. So let's just say you're like me, you had a fourplex, which thank you, you helped me with. I got a quote that was 42% higher than my previous year. We go through a year, I go back to you, and then you can reprice that. And hopefully, knock on wood, with assuming more competition, we go from 4 to 5 to 10 to 12.
yeah.
It's maybe not crazy to think about rates going down a little bit next year.
No, that is not crazy to think. And I would think with the competition in the market, we can see a decrease of 15 to 20%.
Oh, from your lips to I don't know, God's ears or whatever whatever that saying is. That would be a good thing. 20% decrease in insurance rates. That would be a good thing because I got
Well,
hammered this year.
yeah, opposed to the 40 to 60% that we saw the increase. So
Yeah.
it's a little bit of a
Give some back, people.
yeah, it's a little pressure off the shoulders, but it's
Yeah.
not great. But people should expect to see those increases. And then,
Yeah.
like we talked about before, about a year ago, they need to also look at the dwelling aid coverage because of the price of inflation. That dwelling aid coverage, where if you had a $500,000 property, it may look on your dwelling aid that it may look at your premium went up to, $1,700, but you have to look at the dwelling aid, and the dwelling aid probably went up. Your dwelling coverage probably went up $100,000.
Yeah, it's just more expensive these days.
Correct.
Very, very cool.
Yeah.
Well, Matt, we're going to go to you next. You did something very cool. You were the first one to do this in our school community. You're obviously one of the millionaires that come back each and every week. You held a Matt the Mortgage Guy session inside of school. Tell us about it. How did that hour go?
So much fun, man. We had about a dozen people join, and like I told them, I said, this hour's yours. Fire away, with a question about something you're working on, something you have. Know that the other people on this call are going to gain some value and gain some knowledge from your question as well. And so we kind of just went around the horn, different people working on different stuff. Do you know a lender who's going to write a 75% first if the seller carries 25% on the back? Hey, I've got a 416 square foot place out in Clear Lake. I'm having trouble getting a DSCR loan because it's sub 500 square feet. And so I love that because I know that I'm adding value, and, they might already be working with the lender. They might already have something halfway, through escrow, but I give them some peace of mind. I might sleep a little bit better tonight knowing, there was a question about a 7.99 DSCR loan and what that cost and what he was getting. And yeah, you're all set. And so I enjoy that so much, man. I had a lot of fun. And like I told them, I couldn't possibly think of the different scenarios or stuff to run into to know what those questions are going to be, but it makes me better. Yeah. Them asking me questions on something I don't know, and I've got to go do some research, or I've got to reach out to account executives. It's making me better as a loan officer. So I thank the One Rental at a Time community for constantly bringing me questions, for helping me get better. And so the last Friday of the month at 10 a.m., I'm going to tentatively just earmark that 1 hour from 10 to 11 Pacific Standard Time, and do that every month and have a lot of fun with it. Before I forget, I was going to say something along the lines of rates, kind of, what Patrick was saying, where people are some of them frozen and interest rates are a hurdle for them. The latest Fannie Mae interest rate prediction, if we haven't said it enough on this channel, Mike and you and everybody else in your circle, rates aren't going down significantly anytime soon. Fannie Mae, I'm looking at this, and it's 7% the end of 24. And then if you look at the 4 different quarter predictions for 25, 6.9, 6.8, 6.7, 6.6. So 6.6 the end of 25, that's not any significant difference. It's quite honestly not something you couldn't pay $3,500 to get today. Yeah. And so
you can get 6.6 today. Yeah, exactly.
Right. And so, last week, record-breaking week, 7 people into contracts. People are still buying, right? People that I'm around, they're motivated to go out there.
I want to talk about that. I want to talk about that because if you're in the One Rental at a Time community, I've been imploring you to understand that this is our time. Active inventory is growing. Days on market is growing. The average retail investor is scared. It is time to get off your ass, do the work, and write some disrespectful offers. It is time to ask for closing costs. It is time to ask for this. It is time to ask. Now, again, you're going to have to write lots of offers, but rates don't matter, dude. I stand by this statement. I think I've told you, Matt, and Ty kind of privately. I wish rates were 10%. You want to talk about finding motivated sellers? Make everybody pay 10%. I guarantee you I can find a few. It's so counterintuitive for folks, right? High rates, everybody's scared. That's the time. So congrats on a record week.
Yeah. And what I was talking about in a prior meeting and I was on today was I dug in and tried to find the story in every one of those. None of it is market timing. None of it is interest rate. None of it is based on price. People are going to buy homes today, tomorrow, next month, next year, forever, because life happens. And we can look at all the data and we can look at what are interest rates doing, what are home prices doing, and we can structure today's mortgage, think about today's purchase with the information we have. But moving closer to your kid's school, having a place that's got an ADU for your 84-year-old mother, that is what makes somebody move. Having to, change school districts or downsize or upsize, all those things, like that comes first. And that's what drives like a baseline of people are going to move no matter what is going on with interest rates and home prices.
Love it. Love it. Let's go around the horn one more time. We're going to go back to you, Ty, to start this off. I think it was last Friday, you and I did our weekly wrap up, which I greatly appreciate. It's always the last video I do before I take a couple of days off. And you said something in that video, if I recall, talking about you've had more price cuts in the last 3 weeks than you've had in the last 3 years. Tell us a little bit more about what you're seeing. What are the portfolio? Are they troubled assets? They got hair on them. Are they above the median, below the median? What's going on in your book of business that you've seen more price cuts in the last 3 weeks than the last 3 years?
Dude, you're reading my mind. As Matt was talking, I was thinking about that exact topic. A couple of things. One of them, so we just got a price reduction, about a 3-4% reduction. We got one offer over the weekend, below listing price. It's a first-time buyer. It's a first-time buyer property. Now, and again, not knocking the property. It's kind of mediocre. It's not going to work for a deep discount. The guy's very firm. He's like, hey, look, if I can't get my number, the seller, I'll just rent it out. Even though, and he'll take a negative cash flow. He's a little stuck. He doesn't have a lot of equity. So it's just one of these where he bought it during the pandemic. He probably overpaid. He didn't buy it with me. And so, retail buyer. And so now we're now negotiating. And my position is like, look, the buyer's not my buyer, by the way, I only represent the seller, but the buyer's asking for closing costs. It's a price less than the listing price. It's basically a buy down. It has some rate buy down in it. All the things you just talked about. So that's one of them. Second one, condo, beautiful area, very, very affluent area, actually a very wealthy area. It's a condo, so of course it's below the median. But what's interesting is problems with the HOA. Why? Because what Elaine's talking about, there's problems with the HOA insurance because the actual, 60 units of the complex have insurance problems. There's another 60 units down the hill that's actually able to get insurance for some reason because it's not as close to this big break of trees. So vegetation and trees, which it's a beautiful area. So the HOA is talking about getting a lawsuit so that they can divide and become 2 HOAs. So now a retail buyer can't get financing in there. It has to be a cash buyer. So what do? We did a big price reduction, about probably about 8% in terms. So we still think it'll move, but it's just a weird market for all the things we're talking about on this show.
Yeah, very, very cool. I appreciate it. And the one thing I want to ask you, I want to put you on the spot. We've already got Matt, the mortgage guy, doing monthly calls. You released a 6-hour masterclass on creative financing. I know the audience would love a 1 hour with Ty every month. So something to think about.
Let's do it at the end of the month. I would say, and you pick and based on the audience, when they want to do it. But my thought would be 3rd week, 4th week of June. That'll give people a chance to go through the content, creative finance, and really get positioned. And by the way, too, for anybody that's watching, listening, I lead 2 hours every single week for Pace Morby's sub 2 community. So, believe me when I say I know the business. I've do the deals, been doing these deals for 3 decades now. So I would love to interact with your community, Michael.
Yeah, that'd be very cool. I love that. I love it when I put my friends on the spot and they say, yes, thank you, give me more. It's a pretty special group we have here at One Rental at a Time. All right, Pat, somebody wants to buy a first-time home. Somebody wants an investor from out of town wants that special person in Fresno. How would they be able to reach out to you?
Sure. I actually just changed my email to make it easier. So it's homeswithpatkim@gmail, homeswithpatkim@gmail. Yeah. Just changed brokerages because my brokerage just got bought out. So yeah.
There you go. There you go. One more time. What is it?
homeswithpatkim@gmail.com.
There you go. Thank you very much. And Ty, I forgot, man, if somebody want to email you, ask questions, it's just ty@tylg.com.
ty@tylg.com, and put in the subject line "one rental at a time" or ORAT so that I know you're a part of the community or you're from this video. But love, I don't get a lot. I get 2 or 3 now and then, and I love to interact with people. So yeah, please send emails if you have questions or I can be helpful.
Very, very cool. Elaine, a lot of people getting cancellations. A lot of people, frankly, a lot of California investors do not have a insurance broker in their back pocket. Even if you have insurance and you have not gotten a non-renewal, you need to add a broker to your Rolodex just in case. Elaine, how should they reach out to you and have a conversation?
Well, they can always reach out and text or call me at 559-696-9196 or email me at elaine@fastsavings, that's with an S, plural, .co. But just again, to recap, just expect those increases in the premiums for your renewal year if you're not non-renewed or getting a cancellation. And then like Ty said, also, that was a great thing. I'm glad he mentioned it. Yeah, if you're within 500 feet of brush, your next door neighbor may not be, just because he may be 50 feet away. So yeah, he may be getting a rate that you're not going to get, and you might get a non-renewal that he may not get. But that's why you need a broker. So we have certain options. We have a lot of options, as opposed to, having a one rate carrier that only writes their rate, and whether their rate is writing or not, or non-renewing. So that's why you need that. And then also age of properties, that is also a factor. So
very, very cool, folks. Text Elaine, strongly recommended. Add the Rolodex, open a file, get acquainted. 559-696-9196. And Matt, we're going to close it out with you. Thank you again for doing that Mortgage 101, that deep dive, that scenario planning. Thank you for doing it monthly. You are amazing. If somebody wanted to get something started, what do they do?
Quick and easy, greatmortgagebroker.com. We're licensed in 48 states. A lot of these folks, I'm talking to them and doing the warm handoff. Bo's going to take care of you in Nevada. Connor's going to take care of you in Tennessee, California. You're going to be working with me. So greatmortgagebroker.com. Fill out the quick form. Let us know where you're at and how we can help, and we'll get you connected.
Awesome. Thanks, guys. Take care. Later.
Thanks.